All right, guys, we're live. It's February 7, 2022. It's a Monday in the Philippines. It's Sunday in different parts of the world. So it's me again. It's Nikki, it's Jeff, it's Doc Ty, Martha. We should come up with another name for all of us. But how's life? Like, how's the week? Where are you? So I don't know who wants to start for February 7 until 7, 8, 9, 10, 11. So for this week, it's still an earnings related season. Last week has been quite a monster run for companies like Snapchat, Pinterest, and quite a big doozer for Facebook. What do you expect for this week? Or is there anything that you guys are watching? Who wants to start? Anyone can. If anyone wants to share anything. No, nobody. Nobody's gonna start this off.
No.
It's okay. Sige. So
Mm,
I'll try to discuss like my plan. So last week, what I've noticed was quite good moves from a call option standpoint. So obviously this week, I think the biggest headlines was Peloton. I'm not sure if you guys saw that Amazon or there are potential suitors on Peloton. I have no position. I'm very scared of Peloton, but does that have implication for a firm though? Because some people are saying that next week, given that a firm's going to report their numbers February. It's quite
Yeah,
near. It's like
next
2 weeks from now. To me, what's going to be interesting is Affirm and Square.
after
Here,
is,
so
is next
Affirm
Thursday actually.
February 10. Yeah, yeah. So it's nearby. So we've got Affirm in the earnings weeks. I'm also looking at Roblox is coming out on Feb 15. Square is on Feb 24. So wait, let me see which are the earnings that are gonna make a huge move next week, next 3 weeks maybe. So upcoming earnings, I'll share it now. I'll go share the screen. Wait up. So as usual, I do use earnings whispers, makes things easy.
Yeah.
Okay, so on Monday, not much. I mean, well, Serens and Saragon would be interesting to look at. Take Two Interactive, but I wouldn't trade on this. The only trades
No.
that I'll make for the week would be probably on. Actually, I'll trade only a firm on this entire week. The rest, I'll just be watching the numbers. Like I'll be watching how Walt Disney handles it, or
Disney.
how Twilio handles how Chipotle is doing, how Enphase is doing. I think this one is an interesting mix of earnings on Tuesday. Peloton, Digital Turbine, Enphase. I'm not that confident on their earnings, but it would be really interesting if the market would either buy them out on. I'd say the earnings of Enphase would be affected a lot with the subsidy drops, right? So they're probably gonna say lower outlooks. We'll
I
see
think,
if that has been priced in. What do you think?
yeah, and the thing that jumps out to me here is Uber. Um,
Uber,
yeah, I think
Wednesday,
the COVID thing is like,
past.
I think we're really getting past it, and I think you're really going to see a ramping up in profits with Uber. Just from a personal perspective, I've used it a ton, and it seems like it's getting harder and harder to find a ride, and yeah,
If it's
I
gonna
think
be
it's a
a
good situation
tremendous
for
move
them.
for Uber and Lyft, we'll
Hmm.
get the sign already on Tuesday
Yep.
because Lyft is on Tuesday,
On
Uber's
Tuesday.
Wednesday, and Disney's on Wednesday. So if we're gonna like make a bet that just like how Airbnb showed strong recovery last quarter,
Hmm.
then it's likely that if these reopening plays like Uber, Lyft, and Walt Disney give not really good, not great signs, but just like signs of recovery, there
Hmm.
could be some moves there. Yeah, I mean,
Yeah.
might be an interesting week to see how these earnings for these three are. Actually, people would also be betting on Datadog. I think actually last Friday, I've been seeing software stocks already start rising. It's possible that Twilio and Datadog this week are going to be huge big movers. It
Yeah.
might not represent the sector, but it has a lot. It will inspire confidence if any of these two prove that. It doesn't matter if they're trading at 20 or 30 times price of sales if they can match 100% growth. I mean, I think that this concept of highly valued high growth names trading at lavish valuations, people would look twice if they see Twilio and Datadog actually beat numbers. Anyway, where's Twilio now? Twilio's like 180 bucks. Where I mean, it's fallen like 50%, right?
Yeah.
It's 190. So from 400 bucks, let me just show you the heat map. Oh wait, the charts. I think this week is quite interesting for some software names. Here, so Twilio is actually showing some support here about 180. Sure, it could fall 150, but if this one breaks a good number, say on Thursday, these things could swell on the 200 bucks or 250. Anyway, remember this one? Just last May, this was a gap up from 120 to 180. This Twilio doesn't quite disappoint if we're talking about earnings and if you have a very low obstacle course. So like Twilio is one thing that the bulls might be aware of, and Datadog.
Yeah.
Datadog's been very strong here. Last Friday, we saw bulls actually. You saw how crypto rallied? Kaboom. Guys, crypto is moving up. BTC is 42,000 and Ethereum's like near 3,000 again. Let me just show it to you. I'm quite bullish for this
Yeah,
week. I actually am bullish.
Bitcoin broke out of its declining
Yeah.
channel.
Bitcoin broke 38. It's now testing 42, then 45, and who knows? If actually one of the things that I'm actually looking at is, if Bitcoin happens to be a sentiment indicator, it's giving us it's two things. For other people, for them, when cryptocurrency rallies, all they can think about is MSTR, MicroStrategy, or Coinbase, or I'm not sure, like the typical, right? They usually go MicroStrategy or Coinbase. Maybe some will go Hot Farms or Bitfarms. But I think like the majority sees the crypto rally as a sentiment indicator that if crypto can rally, and these are startups, like a lot of blockchains are still very new, what more if you wanted to buy Roblox, which is just coming out 2 weeks from now, especially in light of Snapchat's growth, especially after Unity breaking out of that user growth, like they grew 44%, and the obstacle course that the market was looking on revenues was just 30 to 36. So I'm thinking like the growth stocks or the Cathy Wood related names can actually give the bears or the squeezers a hell of a squeeze. I mean, either this week or next week. I'm bullish. I'm long Roblox calls. Going long Affirm. I am quite. I'm also positive on Square, especially after PayPal's numbers. Because what happened is that it seems very clear that they actually took market share. The market was wrong, in my view, in selling both Square and PayPal. It's like if you saw Coke fall, it doesn't mean that Pepsi actually fell. It's possible that there was actually a change in market share leadership away from PayPal and into either Square or possibly even towards cryptocurrency. We never know. Or well, Visa MasterCard was very strong. So I haven't read the numbers on Amazon. Did any of you guys check? Is there implication for Amazon's numbers with Shopify's upcoming earnings?
Yeah, Amazon AWS is growing like 40%, and then their ad business is bigger than YouTube's ad business, I believe. So so they're doing really well on those two. So those two alone is justifying the valuation for Amazon. However, their sales are declining. They actually got it down. If you look at the earnings, they actually missed earnings, and then they got it down below what all the analysts were estimating. And what's driving profit is because of the Rivian IPO. But if you look deeper into Amazon earnings, what's driving the profit narrative for them is AWS, their ads business, and also of course they raised the prices of Prime. But honestly, it doesn't bode very well. If you look at all the e-commerce stocks like Etsy, Shop lost half its value. A lot of e-commerce stocks, Chewy, they're getting beat up pretty hard because there's a lot of cost push, inflation, and also wage inflation is very high from last week's report. If you look at last week's report, The wage inflation is pretty high. The Europe Central Bank also had sky high inflation. So this week is very risky because if you think about on Thursday, we have the CPI print, which people are expecting it to be one of the highest again. And that could scare the market and honestly provide a dip opportunity. Another thing is on Wednesday we have the Fed auction for bonds. If you guys notice, Wednesday is normally when we spike. We'll rally off like Friday, Monday weakness, and we'll rally for like 3 days. Normally Friday, Monday, Tuesday, and then Wednesday. You look at last week. That's when we got weak.
Yeah.
But this week is very interesting because of those two big. Also, the Fed is going to be talking a lot on Wednesday. Maybe a lot of Fed speakers on Wednesday. So who knows what they're going to talk about? Bank of America is expecting 7 rate hikes. So the market is pricing in 4.
Yep.
So if CPI prints really high or the bond auction goes really poorly, which means that the bond yields rise because there's not enough demand for the bonds, the sale doesn't go as well. So they have to increase the yields to get more investors in. Then that is a negative signal for the market. And Bitcoin, cryptocurrency is bullish, but if you look at the weekly chart on Bitcoin, it's the first time the 20-day moving average has crossed decisively below the 5 EMA and the weekly. And I think Bitcoin's going to bounce at like 43, 44,000. It's going to hit that mark and it's going to sell off, I think. It's probably going to happen this week. So cryptocurrency does look green. So we're probably going to have like a short-term bounce. I think if there's any Monday weakness, we're going to probably bounce on Monday like we do every Monday. The pattern has been we sell off, we bounce, we rally into Tuesday, and then we rally Wednesday, or we start selling off into Wednesday. So I'll be very cautious. There's also Russia, Ukraine, but like Nikki and I talked earlier, you cannot predict that. So honestly, we can't control that. So whatever happens with that. However, we do know that Europe has already talked about, they already printed a very high inflation. The U.S. jobs report from last week, wage inflation was pretty significant. Where is the report?
You could share it if you wish. Like there's a share screen button.
It's hard to think too now with the Olympics going on in Beijing. Mm-hmm. And I know the relationship that China and Russia have. I just can't see them, causing any ruckus like during that whole event.
So you're more on the sense that Russia's not gonna attempt any war within, like at least like for February. That all of that is just.
Yeah, I mean it's hard to. I just can't see that happening. Like causing an event that potentially would cause people to like pull out all their athletes and cause like this big ruckus for something that's like a very big deal for Beijing. So, like you said, you can't predict stuff like that, but it's hard. I think that's a very, very big factor, the relationship that Russia and China have. Yeah.
I'm still staying off limits on Chinese stocks because sometimes they go up, sometimes they go down. It's just too volatile. And with the kind of the market wherein you could buy growth stocks at like 50 or 70% off valuations. Yeah. And with earnings that could possibly beat the way Unity did. I mean, part of me just thinks markets are really looking for a hiding place, and they don't want to necessarily hide in cash. What the earnings results prove is that bulls are willing to bet if it's low enough, either for a short-term squeeze or actually to really go long. So I'm not sure if they're gonna trade what happened towards Amazon, what happened towards Google, but I would assume after the earnings came out for AMD, for Xilinx, for Google, any dips nowadays for these types of names, people would actually go into semiconductors and not just hide there, but actually predict that growth is gonna stay strong there for the next few quarters. It's the safer bet for them. And with this constant volatility, you get a premium actually for what's recurring and safe. And I think that's what happened with amongst the FANGs. That's really what happened why Google could be hitting all-time highs. For all we know, a pullback on Google at 2.6 or 2.5 will make a lot of people buy calls. Like, I'm not sure if this will happen, but my prediction is that the people who were very angry with Facebook would actually just position all towards Google. So
Yeah.
you'll get the
Yeah.
Nasdaq in a trading range because some stocks would just fall 40-50% sharply, and then the rest would go 25% or 50%. If they're not going to go up, at the very least, they won't fall. They'll stay to their like within 10% from their all-time high zones. I
It looked
mean,
like it looked like
is
last
that
week.
looking to be what's happening?
It looked like last week, like half of the people that sold their Facebook just put it in Snapchat, and they were just like looking for a reason to like send something. And that
Yeah,
was
but
interesting to me. I've seen Snap, and I think I've tried to play Snap on a couple earnings, and I didn't play this one.
wow,
And,
congrats!
of
So you got
course,
the Snapchat calls.
yeah.
Good, long since calls. Good. Yeah, actually, what happened with Unity recently? Because I saw that because I'm very bullish on Unity and Roblox,
Yeah,
but
yeah.
I just didn't want to bet on earnings simply because if the market will penalize if they lose money. I was afraid of the repercussions because I'm tired of the
Mhm.
narrative that people will
Mhm.
say that it's growing, but heck, what earnings are we speaking about?
Yeah.
So when I saw that the market actually bought Unity at 90 to close at 108, despite the fact that it actually lost money, it made me more confident to actually bet
Okay.
on Roblox coming into the earnings season
Yeah.
and even for a firm. Because if they are able to be less how do I say this? Less penalizing for any company that's not earning money. I don't know if it had to do with just a revenue growth, but I'm seeing that the market is less bearish, especially
Yeah.
in light of
Yeah.
those earnings
It's a
results.
it's a good sign to see like
It's a good sign, yeah, that
to
we
see
are seeing
Snap
some
go off
bottoming out.
like that. Like we're a couple months ago, like report earnings sell off.
Yeah,
That was just like no matter what they did,
no matter,
it was
yeah,
sold
I
off.
thought before that the market was just going to ignore earnings. And
Mhm.
so part of me was thinking, who cares about earnings season if nobody really cares whether you grew 50% or 100%? I mean,
Yeah.
I thought that they would just really ignore all the earnings. But lo and behold, last
Yeah.
week proved that if you could beat, you could get a hell of a squeeze. So, I
Like
mean,
Bill.com had really
yeah,
strong
Yeah.
earnings, right?
Bill.com had
They
strong numbers.
actually accelerated their growth, like
Yeah.
AMD.
Yeah.
So that
Mhm.
was a really good
Yeah,
one. And
I
also,
think Bill
like
was like up 20%,
if you
right?
look at the
Yeah.
DIX, the dark pool indicator, it's actually
Mhm.
really bullish. If you guys,
Yeah. Yeah, I've been
yeah,
following that. I like it when
let me
when it's higher than the actual price movement. So
let me share. Yeah, do you guys see this here?
Yeah, we can
Yeah.
see it.
So
Yeah.
you see the dark pool, which
Yeah.
is it's actually it's spiked on. It went all the way up from a measured move of where is it? Oh, yeah, it went from 37.2%, which is January 24th. And January 24th, if we remember correctly, was the Monday, which was the Friday was like red, and then Monday was like that huge sell off.
Mhm.
So you saw like huge moves there where that was the bottom probably for a lot
Yeah,
of stocks, like
Yeah.
UPST, a lot of stocks, and then you
yeah,
notice the 25th, right? It jumped up to 51.4% on January 26th,
yes.
which is crazy. That's a crazy move. Like, look, and
Crazy.
now Dix is staying pretty above elevated right now, right? It went back up again. It hit over 50% again. And we haven't seen the dark pool actually hit that high since the March 2020 crash. If you look at the whole history here, you see the line here. This right here, this point is 48%, and we're staying pretty much above 48% or higher right now.
Yeah.
So that tells me that the earnings are really strong, and I think the sell off is a dip opportunity for the smart money to
Yeah.
basically
Yeah.
get things on sale is what I'm thinking.
Mhm.
Um, I'm not sure how much of the the rate hikes has been priced in, but I think it's been priced in since leading up to the January FOMC meeting, and now the market is digesting it. And then a lot of these companies they're still talking. You notice when Facebook talked about inflation having an issue, the market just like Nasdaq went -2%. And I think that Facebook is a unique situation, and I think the market is starting to sniff that out. because look at Google's earnings were just massive, crazy successful. Apple was really strong. Amazon was decent. Facebook was bad. And Facebook's story, I think Facebook's going to go lower because they were telling investors to take a ride with them. You know, we're going to be selling a new product called the metaverse or new platform, and it's going to take about 10 years to materialize. So I'm just going to sell you a new hot dog, and the hot dog's not profitable. So, and then they're facing crazy competition from TikTok. I mean, TikTok is clearly short video is clearly eating into their margins, and they're no longer a growth stock. You look at their growth and their guidance; they lowered guidance, and they're actually no longer a growth stock. They're now a value tech stock. So that's why Facebook, I think, will go lower because they're spending money. They're spending like $20 billion, and investors aren't going to have the stomach to hold through that and believe in the metaverse until Mark proves them wrong again. So if anyone's looking at Facebook, be very, very careful. And you notice the dip that Facebook caused was bought up completely, pretty much. A lot of the companies that sold off, like Bill to AMD to Nvidia, they all like Google, they all start to recover. However, I think that for the short term, I think once CPI is clear, whatever happens with CPI this week and we have a dip, the earnings are really strong, as we can see. It's a reflection of the economy. And that means that in the short term, I think that we could see a nice bounce back to retest all-time highs at 4,700, and then we'll see what happens from there. And the reason why I'm basing this is because of the gamma flow too. If you look at gamma, you look at the bottom here, it was negative. That was the lowest I've ever seen gamma as well. If you notice, it's lower than March, like the COVID crash. It was lower than the COVID crash. You see, the COVID crash was negative 2 billion. This went down to look at the market. It's negative 7.5 billion here, and then the other time, remember in September, end of September, wasn't like the market looked like it was like just selling off like crazy. That was negative 5.6 billion. So what's concerning about this is the swings are getting more elevated. So the gamma is swinging back and forth, and that is not a good sign because that means there's more volatility. Like Snapchat literally lost 25% of its market cap. And then it went up 60%. I mean, that's like a penny stock movement, and that is actually kind of concerning, to be honest with you, because there's so much leverage, there's so much options flow leverage in the system. So you have to be very careful. So basically, what I'm saying is take your gains. If you see anything like crazy gains like that, take those gains and then just see what happens next, because you never know what measured move can happen afterwards. But based on the strong earnings, what happens is we rally off strong earnings. And then we have March FOMC, so I think that we'll probably rally. If CPI is not bad and the bond auction goes well this week, then we're gonna rally for most of February until we go towards March FOMC, which then we'll start selling off because we always sell off before the Fed actually hikes, and then once the Fed actually hikes the rates, where they said they're going to hike the rate. It then is a bottom because everyone doesn't want to be in there. Everyone if you look at the mortgage chart as well, the mortgage rates are increasing. So when mortgage rates increase, equities normally follow, and equities go lower. So that's another kind of indicator to look at. So I think like right now, like we need something. The market's in a holding pattern. It's going to be trade between 4,400 and 4,500, I think, around those two channels, like 43 to 45. And then once CPI or the Fed Wednesday bond auction makes a clear indicator, then we'll make a direction up or down. So we'll see. But I do know towards FOMC in March we should see weakness again because January was a very weak month, and I think January is a negative month, and I think 70% of the time, if you look at the history of the market, February is also a negative month, 70% of the time. So
yeah, so I learned a lot actually using your charts when you actually use the January 24 drops and the January 26 moves. Yeah, I remember in those 3 days, 24, 26, a complete buy and holder in this type of environment will just get killed. Either he's down 25% on Pinterest, the other day stops out, and then gets killed on that 60% move as well on the next day after hours. So I mean, we are in a way, the market is really benefiting traders because what happened with the earnings, and I like what our member actually did. What one member of ours did a long strangle technique. So we have been opining that if the calls and the put options on both sides is very cheap, you can actually make money. Simply example, let's assume that I'm bullish on Roblox. So I'm gonna long 66 calls. The last price was 63, right?
Yep.
64, 63. So the call option on the 66 is about for Feb 18 expiry is about 4.9 to 5.5. So roughly $5. Let's assume that I could insure my risk, say long a put option at $60. Let's say I'm wrong and Roblox fell. I haven't seen the risk premium of the $60 put option. But nowadays, if you think that, let's assume that I could buy the put option, the 60 out of the money call put option for about say $3. So my total risk is $8, right? Either way would happen to be right. Either it's above 66 or below 60 upon earnings day. And I paid $8, right? So assuming that the market is so haywire, nowadays it's so haywire, people can actually earn money simply by volatility. It has nothing to do with direction. That's what he did. He just went long Snapchat calls and Snapchat puts. Obviously, his put option just expired worthless, but his calls like went
Yeah, 400%. Yeah.
like if you have a 60% move on an after hours after a Snapchat move, and since everyone is so bearish currently with a lot of growth stocks, once you actually get a bullish move like that,
Yeah. The
bulls
shorts
Yeah.
get wiped.
the shorts get
Yep.
wiped out very clearly. And even so, let's assume that the shorts are right. After selling from 120 to $60, they're right. It goes move like a Pelotonian move, like another 50% off. You wouldn't lose much. Because the point is, you had a put option, your puts would have exploded as well. If the market is so haywire today, in a way, I've been telling people the longs are scared, but the shorts are equally scared. I think we're in a market wherein both sides are scared. And the way to attack this type of scenario, especially on earnings events, is to do the long strangle technique. You do a long call and a long put, if and only if both sides' volatility is cheap enough. Because especially since it's going to time decay anyway. So, example, today it's about Feb 7, right? So we talked about Disney and Uber and Lyft this week. Let's assume you know nothing about Disney, Uber, and Lyft's earnings. But here's what's gonna happen this week, or maybe Twilio and Datadog. I'd say Twilio habitually moves 20, like the implied volatility move of Twilio. If they beat, is like above 15%, and implied volatility of Twilio if they fail is also 15 to 20%. That type of volatility of 30%, either up or down, you could actually make a strangle technique there. Probably if the strangle options would just cost me less than 10% premium, I think that's worth it. Like about 10% premium less for both sides would be good. I would be okay with it. I mean, for the risk that you take, of course, some people really make a directional bet, but it's unique to this type of scenario. Because what happened January 24 and 26, it's really ridiculous. As he said, the gamma, all the volatility. So that's how I'll attack this type of market.
I'm kind of in the mindset right now. There's a couple. I'll just throw three out right now that I think are in a really good place, and they have earnings coming up. The first one would be Zoom. I know we kind of
when's Zoom's
quite a bit.
income?
They're well, no, actually, I think Zoom is in March, like at the beginning of
March.
But I think they're in a good spot right here. So any dips on that, I'm willing to just tuck that away and play that in. The next one would be global e-commerce.
Yeah,
they have earnings coming up. I think it's like the next week, like the 16
it's
or
February
17.
16. Yeah.
I think that's tremendous growth in that company, and they're in a really good spot technically. I was just looking at it the other day. And then the other one would be Palantir. That's another one.
When's Palantir's numbers again?
17.
Yeah.
Very near.
Yeah, so,
thanks for calling that out.
Yeah,
Another
those two, I
thing-
think any dips on those this week, I would look to try to add to those. Yeah.
Another thing that I think is bullish on Palantir is that Alex Karp is going to be on the earnings call.
Okay.
Oh,
So for him to be in the earnings call, and they are broadcasting them in YouTube. So if you don't have anything good to showcase, what would be the use to?
why would the CEO even be there? Agree.
Yeah.
Good spot. Good look. Good
And
thinking.
I'm really bullish in Palantir. It's
Mhm.
my actual only long. I'm playing it in synthetic longs, and I think they are going to do great in February 17th.
Actually, heading into February, I believe that there will be very few companies that would really earn, or at the very least beat expectations. I mean, as I said, I know that people who went long the growth stocks have already gotten killed. But if they were able to navigate their January shorts quite early on, or say November, December, January, if they were shorting or at least held on to cash, this February, I think the market is giving all these bulls a chance to redeem themselves. Like at some point in time, I think this February is earnings month. If Palantir truly grew, people would actually buy it up. If it's like 13, it could probably grow 16 or 17. I'm not saying that it's gonna like moonshot. It's not gonna be as drastic of a drop as was being done to all of these growth stocks in the past. Because that's the reason why, if you notice, Pinterest didn't grow magically. I took a look at the numbers. It's not as I mean, among Snapchat or Pinterest, Snapchat did well. That's why it was like 60% up. It had profits, like, and nobody was expecting that to happen on Snapchat. So, like, if Palantir just happens to say, okay, we're hitting this much earnings and revenues, the market would go wild. It's gonna be validation for all growth stock investors that they've tried to kill every growth stocks unwarranted just because of this 7 interest rate hikes. But look, it's not inflationary. I mean, when does software ever become an inflationary problem? Microsoft never had inflationary problems, neither AMD. And I think Twilio and Datadog would just prove the bulls right. So, like, software as a service companies are not inflationary pressured.
Yeah.
You could feel inflation only for Starbucks, Chipotle. So I'll be bearish on Starbucks and Chipotle. Chipotle is coming out this week, so I'm a bear on Chipotle. But for Datadog and Twilio, so I think like what's nice about this week is that number one, the market's listening to earnings calls, and number two, we've got a mixed fan report. A mixed
Yeah.
fan report means that bulls can win, bears can win. It depends on like what company you're actually betting upon. Because I've seen how the Square bulls, I've seen how Kathy has been buying a lot of Square, especially in light of like PayPal's numbers. And I agree with that. Because like any drop on PayPal's numbers and user growth is actually a win for Square, isn't it? Because like it's
Yeah.
direct opposite. Either it's Square eating markets the lunch of PayPal, or we're just seeing, I don't know, I think execution wise, Square just recently finished their Afterpay acquisition. So like buying Square today is like getting that entire Afterpay almost for free. Because
Yeah.
Square right now is 108, right? $100. I'm quite bullish heading into earnings also for Square.
Yeah.
Because like I've already seen data. There's already data showing Cash App growing higher and Venmo's like declining. So like it's like a huge where was I'll try to share if I find it. But there's really metrics that we can already have evidence. Plus, this is also good. Like Square, aka Jack Dorsey. I know some people are bearish about him going all in on his Bitcoin escapades, but I love how he is, as a CEO who's really directly on top of Square. They just allowed millions of merchants to also use Square's Bitcoin mining service, I think. And I think like he just bought a taco. I think he was like sharing how he was helping.
Yeah.
I don't know. I think like among CEOs that's really doing most good for crypto, it's really Square. It's not Coinbase. I mean, it's not MicroStrategy. When if I want to go long crypto, my business case is it's Square. Because MSTSR is just a leveraged Bitcoin fund, and Coinbase is just another brokerage firm.
The thing I
It's not like
the thing I
directly
really
going.
the thing I really like about Square too, I think there's two things, right? They have a ton of data because you can go to tons of stores and they're just collecting data on who's purchasing,
Yep.
Yeah.
where they what financial system they're using to purchase things, how much they're buying. That's a lot of data and information that they can provide to companies. So that's sort of something that I think goes overlooked with them. And I really like you said, I think Jack Dorsey, he really understands that the writing's on the wall in terms of the necessity for blockchain system.
Yeah.
And you don't change your company's name to block and move away from Twitter and really try to hone in and focus on this if you don't understand that the writing's on the wall at some point. And you want to position yourself perfectly for that situation. So I agree with you 100%.
I was actually afraid when Square bought this Afterpay because I thought that it would be a huge deterrent for a firm. I was that scared when Square acquired Afterpay. I thought that was one of the greatest news ever, and I was surprised that, hey, why is it that I am bullish on this acquisition and the market isn't? And I've seen other bulls also discuss this. Matt Cochran from Motley Fool, he's very good when it comes to these cashless revolution. I'm gonna share to you what he just tweeted about Square. I'm just, of course, I'm talking my books here, but I think like the market amongst these fintech giants, they really are not paying attention to what Jack Dorsey's been doing. All of these, and they're just laughing. I mean, okay, I'm gonna share to you some of these data that's been just shared all throughout all the community who wanted to buy Square. Wait up. So I'm like gonna like discuss why I'm bullish. So Matt Cochran did a lot. No, this one's good. Look at this market share downloads by apps. This is all the countries. The green side is your Square. So that is how structural winners, yes, but Square is the leader here. And they just now offered all the buy now, pay later through Afterpay. And that was as of February 1. So the first of the month. And then let me see the Matt. I'll look for Matt Cochran. He's very good when it comes to all. I know he was a bull on Square since it was 10. He was part of Molly Fools and now also for 7 Investing. He's very good when it comes to fintech. That's why I love looking at his insights. Where was it? I'm trying. Why are fintechs like SoFi and Square eager to obtain bank charters? You need to be able to own the deposits. And to own the deposits, you got to have a charter. It puts big competitive barriers around the banking industry. I haven't listened to this one, but I'm sure that all these conversations are good. But really, my banking play would have to be Square. So I know some people want SoFi as well. So I would say both, like Square, SoFi are doing really well. Actually, the sell-off on PayPal is also something that it's exaggerated. I think for some fintech bulls, you want to go through these sharings by Matt Cochran. He said PayPal went from 120 people who was working on risk and compliance 8 years ago. Now it's more than 4,000. And CEO Schulman said to be best in class at risk and compliance, you have to have a great relationship with regulators and law enforcement around the world is foundational. I don't know, like I don't know, is he bullish or is he bearish? But the point is, like, I guess there's just too many employees when you have a big business like him. It tells you a lot, right? I don't know, like I can't find the Square discussion. I saw it somewhere.
Yeah, it's kind of interesting. Like I kind of put
but both of them are actually on the right page. I'd say that Square and PayPal are both in the right track. Probably just user declines on. I haven't seen how bad it was that PayPal was sold off like from 170 to 120. It's like $50 down, right? It was about losing users.
I guess I kind of look at it like like I think of Cash App as like they're much more ingrained like with like younger people, and then also they're ingrained with like brick and mortar stores in terms of Square being in the stores, and then PayPal, they have like a huge presence online. So if you go to buy something online, generally you could either do it with your Apple Pay or through with your PayPal. So I almost kind of like think of them like differently in that regard.
I, I love Square, but you know who is a huge player in the point of sales here in Mexico? It's
Who?
Mercado Libre.
Mercado Libre.
Yes.
It's,
Totally agree with it. That's
it's,
why you're very bullish on Mercado Pago.
it's Mercado Pago. To every restaurant that I go, every restaurant has Mercado Pago point of sales. And I use Mercado Libre. I was telling Ty the other day, at least twice per month.
Hey, did you guys notice that most SaaS names actually beat expectations? From Atlassian to Microsoft to ServiceNow. That's why I think there is a pattern here. I'm going to read to you what Microsoft just said. So it ties into what Doc T was saying to take a look at Zoom video upon earnings. You have to take a look on Datadog and TWLO this week. Because the penalty on growth stocks, especially like software as a service, it has nothing to do with fundamentals. And if the market's going to look at the earnings season this week and take a look at the real numbers, you will get a pop on them. I'm going to share to you what Satya Nadella just shared during the Microsoft report. Let's read through this. Let me just share. So I'm heading this week mostly bullish. I think like most people wanted to just look at the charts and the charts are, of course, down 40-50%, right? So now you really need to look at how good the numbers are. Look at this. Satya said, overall, we see a pretty strong demand signal. Going into the pandemic, we saw the demand increase because of the constraints the pandemic put on. And then coming out of the pandemic, we are also seeing actually a lot of constraints in the economy. And the resources I said that help drives productivity while keeping costs down is digital tech. So take something like Power Apps. It's an example right in the middle of our stack, helping drive that next level of productivity. And then from the stack, security to our cloud infrastructure to business applications and solutions like Team is very strong. So like, look, maybe we are able today. I mean, if you look at all the SaaS names today, I think like they were crushed. Palantir is also a SaaS name, right? So that has a lot of beat that it's possible. It could beat. I'd say like this week, my suggestion for any bear out there is to actually take a look at the numbers. You could get squeezed and killed the way Pinterest and Snapchat and Unity did. It doesn't have to be an Amazon. Nowadays, and even the Amazon numbers should shake up the bears. Amazon showed that AWS was growing. How much was it? How much did AWS grow this month?
40%.
40%. And Amazon's already the number one. And that's like what? Like their Amazon Web Services growing 40% should shock everyone, because that would mean
They also made their software more efficient. So they made their software more efficient, where instead of 4-year life cycle, it's a 5-year amortization. So they basically they improved the software so well that they can use the hardware for another year in the earnings transcript. So AWS is really compared to Google. Google is actually negative margin. They're Google Cloud, but Amazon is positive. Like they've been holding a 24% margin for quite a few years now. So they're very ahead. So Amazon's like most prized possession is their AWS cloud business. It's worth $1 trillion on its own. Like,
Yep.
Yeah, well, for YouTube, I think what really got up for Google, it was really YouTube ads that made the market pay up. I think no. I haven't like took a look on each, like I was just like looking on the headlines. Like people were like so astonished. So actually Disney this week is gonna be having a hard time, because if Netflix has been losing, or rather having a difficulty to add, I'd say Disney's problems this week is also gonna be related to streaming. So I would be cautious on Disney. I would be cautious on Chipotle, because I'm a little bit bearish on that.
What about Bubba Fett though?
I think if you look at Starbucks talked about
Starbucks
it like
really bad, right?
Yes, it was bad. They talked about inflation, wage inflation, and all that, and that is reflected in the jobs report on Friday. So Chipotle, I think, is going to go down. Like they could lose. They can go from 1,500 to 1,000.
Yeah, I'm
Um,
actually bearish on Chipotle. Haven't bought put options though. But look at the setup. Chipotle is like giving every bear uh, a chance to short for a very cheap put option. Look at this, Chipotle. Like, if I could buy a put option, say I'm gonna take a risk, like a Feb. Today is like Feb 7, right? So they're gonna report Feb 9. So I'll just get a 1 week expiry, Feb 11. If I buy a out of the money put option, say 1,400, and they really do very badly, or maybe just at the money, at the money put option. Anyway, it's probably gonna be cheap. It's probably just less than $10 for this. Um, he's right. Like the writings are on the wall. It's been bearish since 2000, 18, 16. I mean,
yeah,
it can't actually beat
one thing though with Chipotle
numbers.
is because I think they made comments on their last earnings is they talked about like an analyst asked about price inflation, cost of goods, and all that raw materials, and they're confident. They said that not only is their digital business growing, but they said that our customers love our product so much that we can raise prices without a problem, and that's been the case actually for all the previous earnings, and that's why Chipotle went up so high.
Oh, high, yeah.
So when you're making this put option, you're taking a huge risk, and you're basically saying that inflation is going to finally catch up, and that their demand and guidance will decrease. But if Chipotle says we're going to open more stores, inflation is not a problem, we can pay our workers more because they love working there, then then your put's gonna,
Yeah,
so
from an
just be cautious. So you can do
perspective,
a spread, maybe do a spread
yeah, do spread.
to
Actually, from an
cover both.
options
But
perspective, what's very cheap today is really being a bull. Like, I mean, everyone's like practically bearish. You don't
that's
even need to
true.
buy a call
Yeah.
option. You can just go long a stock. Like, I saw like my risk of a cut loss if I was wrong. Say I bought, of course, barring one black swan event of a war, which is hard to price in, right? Because that would be a gap down, no matter what I own. So, barring that risk of a gap down on wars, I'd say that almost all the setups right now for all of these earnings that we like, Square, maybe Zoom,
Yeah,
seem
with
like a little bit
Zoom, I want
expensive.
to comment about Zoom real quick. Their enterprise value is 37.6 billion. Their current market cap is 43 billion. They have 5 billion in cash and 97 million in debt. If you think Zoom could sell off to their enterprise value, that's a 20% cut. So it could go down to 120. And I think it's going to go down to 120 because if you look at Netflix and all of the pandemic stocks, the pandemic winners, their growth is starting to slow. And if you look
Mhm.
at Zoom's earnings for the past few quarters, they're still growing on top of like the 300%. They're growing
This
like,
is gonna
you
be a
know,
cash flow play, right?
yeah, they're a cash
So
flow play. So, but I think
we
that
wait for them to go down.
so like TDOC, for example, right? TDOC is basically going to bottom at 70. It's not going to go any lower than that because that's their book value, right? TDOC's valuation is like an A, right? Their enterprise value is 12.4 billion and their market cap is 12 billion. They have 1.3 billion in
Yeah.
debt and 830 million in cash. So they're basically worth their enterprise value. Like why would you sell it less than that? And it's a growing business, right? They have high margins. They're just like their net income is negative because they're spending on growth. So I think TDOC is a good play because they're closer to their enterprise value. However, Zoom, there's some risk. Like I think that it needs to
Mhm.
go down first to probably 120 range, and then it's going to resume its uptrend because it's still kind of a little highly valued
Mhm.
compared to this enterprise value. Palantir is also risky too. I know we talked about Palantir. It's a meme stock. It's very popular with retail. Palantir is valuation is pretty pricey. You know,
Yeah.
they have a PE non-gap forward of like 88. So it's pretty high if you look at they have to really do very very well in earnings for their stock to go up. But their market cap's at 26 billion. They have 2.5 in cash and 263 in debt, so they're cash flow positive. And their enterprise value is at 23 billion. So
Yeah.
so basically they could go down a little more, and I think if they do end up at $10, then I would definitely buy Palantir. But just be careful because the retail favorite stocks, you got to be
Yeah.
very careful because you saw how
They
much
get
Palantir
punished.
fell, right?
They get
So
punished for Kathy too.
Exactly. So TDOC is good from a valuation standpoint, because it's now starting to matter, right? Valuations don't matter when you're in a bull market,
Mhm.
and they kind of don't matter in a bear market too, because it's the macro that kind of drives
Yeah.
the prices.
Yeah.
So I just be cautious on those, and really look at the cash flow, look at the debt, look at their enterprise value, and how far off are they from that. And that's where like I'm gonna swing TDOC.
Yeah.
Like
Yeah.
TDOC, I think is pretty safe. I think sellers are pretty exhausted on TDOC.
Yeah.
The chart looks really good, and I don't think it's going to go any lower than 70. If it's 70, I'm going to buy and just like hold it for long term, because I did a telemedicine. It's awesome. It's great. Like I don't see this. We're not going to go back. So those are kind of my thoughts on those specific stocks, and the valuation piece. I want to share this article real quick,
Sure.
just to kind of update everyone, because short term we're bullish, right? We think we're going to
Yeah,
swing.
just for a few days, and then we'll just have to trade the ranges.
Yeah, we're gonna swing a little bit here, but I can't emphasize like the long term and why valuations will come down. You know,
Mhm.
Nasdaq was trading at
Thanks
24
for being
times.
cautious, so that we'll just always
Yeah.
be on the
So
nimble side.
so and there's another trend that you see, like our features are red, right? We're seeing more
Mhm.
red features than normal. Remember back in 2020 and 2021, features were green. They were like always green, green. We're like what the hell? It was just green that yesterday. It's green again. Like it was just crazy bull, right? But now you
And
notice.
usually,
There's
I also noticed the reason why on a Friday it is up is not because we are bullish. Usually on Friday, all the shorts will begin to cover. Because like heading into Friday, I had a short. I covered it only because it was the weekend. I just wanted to
yeah.
take profits, and that was it.
So in bear markets, Fridays normally end green because they want
Fridays
to.
and green just because of
They,
expiry dates or
exactly.
options
They
expiry.
expire. Options expire on Fridays usually. And then number two is if there's good news over the weekend, you don't want to be short, right? So
Mhm.
you're
Yeah.
gonna get blown up. So that's why they don't want to hold over the weekend usually. So if you look at like this sheet here, right? You look at like the Fed's balance sheet, like this shows like their balance, and this is like I think a topic the market's going to start to talk about. Everyone's focused on rates right now, but I want to get ahead of what the market's thinking, and
Mhm.
what they're going to focus on is the balance sheet. Okay, this is a problem. See, the Fed's balance sheet increased right from, you know, if you look here from
So about
3.6
$9
trillion
trillion,
to 9
almost
trillion. Yeah.
9
So
trillion.
they're holding that in mortgage-backed securities, bonds. They have to unload this, right? They have to basically go back to pre-pandemic level.
Mhm.
So how fast they do this is what's going to cause the market to panic. So we have to be very cautious around. That's why CPI is very risky, guys. I can't emphasize that. If CPI comes
When
like
is the
really
CPI
high
date
on
out?
Thursday
This
CPI.
Thursday. So
Yeah.
okay,
So
so the shorts
and
are
you
gonna.
notice when the Europe Central Bank printed a high CPI, Italy had like the highest inflation is reported. The UK had the highest inflation, and what the UK Central Bank do? They immediately raised rates. They said 50
Half a
basis
point.
points. 50 basis points would cause the market to panic. I'm telling you, like 25 basis point is something they can handle. We'll get a dip. But if the Fed comes out and say, okay, we're gonna raise rates to 50 basis points, then that's gonna cause the market to really panic. And they have to also not only raise rates, but they have to offload their balance sheet. Like this is important. Like they can't keep this going, right? This has to be slowly uh,
Unwound.
quantitative tightening, which is unwound back to pre-pandemic level. And that's why like I'm cautious. Long term, I'm bearish. Short term, I'm gonna play the swings, of course. And then another thing I want to show you guys too is some interesting. This is a really good article from Reuters here that I want to share real quick, so that we can kind of discuss this kind of macro
Yeah.
theme here. This is a really good article from Reuters. So I'll highlight the biggest things here. It's advertising diamond rings, says I just got engaged. Hilarious. So yeah, so U.S. facing highest inflation since 1982, right? So we know that's like a macro theme that's not going to go away. This is the highest inflation we've seen in 40 years. 40 years we've never seen this inflation before. So the Fed there's some concern that the Fed is behind the curve. They need to tighten sooner, otherwise this inflation could get out of control. So that's why the CPI print on Thursday, I can't emphasize enough, it will determine that the market's in a holding pattern, so it will determine if we go up or we're gonna go down. I think that we're probably gonna go down, given that CPI is not. It's like if you look at rent has risen like 40%, 30-40%. Food prices are still rising. Wage inflation is now higher than expected, right? I don't see the CPI print being lower than estimate. So we have to be very cautious.
Do you
And
hold put options when you're cautious? Like how do you, or is it just cash for you when you're cautious?
I'm cash. I'm
You
like,
trade smaller. So
yeah,
yeah,
I
I
trade
think
a lot
that's also
smaller.
fine because I understand the sentiment is very risky. But I think like the majority of people are in the March 2020 pandemic season thinking that the market's going to be bearish for entire year. I might as well just hold 90% of my money in cash, 10% in stocks if I really want to go long something. And I think that is the right approach. And the people who are
Yeah.
trading the same size that they were would also have to be very fast. Like nowadays, like if you sleep, your lungs could just get killed if you don't have a trail stop. Like my sense is that people who woke up without a stop loss on Facebook, or even if they did, what type of stop loss would have prevented them to lose like a 25% gap down anyway? Like if they had it at 330 and now it's what 230, no matter if they had a stop, it would only have prevented them to lose less had they had a put option as an insurance. So agree with what you're saying that I
So
mean last week had a lot of bombs, Spotify, Facebook. So it's not so the earnings is like a mixed bag, and then you've got these quantitative easing that can't be happening anymore. So what's the only good news? Is that just earnings and everything else is bad?
yes, correct. But the thing with earnings is like even though fundamentals are strong and those companies will be rewarded because the shorts get blown out,
Mm-hmm.
the
It'll just be a day,
valuations,
right? It
yeah,
will
the
be.
valuations will still matter because the macro is what
Mhm,
drives it. And honestly, the Fed liquidity is everything, right?
mhm.
Like the reason why we had such a crazy rally was that the Fed literally gave so much liquidity to the system.
Yeah.
So right now, like I'm hiding this is very important. You can see, look, when the March crash happened, you can see the balance sheet increased and everything followed it, right? Liquidity, asset prices, everything just followed it. And they're going to decrease. I can't emphasize enough. Long term, I'm bearish because they are going to remove and tighten quantitatively like that just they're removing trillions of dollars from the system. That has to come
Mhm.
from somewhere, and asset prices will normally take the first hit. That's why Bitcoin, even though it's rallying, I think it's going to hit like 44,000. And I'll
And
show
we'll
a few
get hit
charts here just
again.
to show you guys a long term. Like this is
Sure.
a short term bounce, and I'll show you guys a longer time frame to
Mhm.
understand like where this could be headed. But they're going to shrink their holdings of treasury bonds and mortgage backs, right? When they do that, that increases the cost of credit. That makes credit more expensive. It increases the rates. It basically, if they raise the rates and they decrease their balance sheet at the same time, like, and they do it, they accelerate that's a big problem. The market's going to panic. Like I can't emphasize enough. Like that's going to cause actually the 15% correction that I'm waiting for. That hasn't happened yet. We corrected 10% already, by the way, and I think that we're going to correct like
So
another
you're
ten
looking
percent.
at
Where
about
Yeah.
S&P 25, the
yeah,
same price prediction of Grantham.
yeah, and the rates are rising again. You look
How
at
is
this
that?
chart, right? Rising rates, right? This is again like equities always get kind of short term. They get punished, but remember we always correct, and then after
Mhm.
the rising rates and taper is happening, the economy is still healthy, and then we then resume our uptrend. If you
Mhm.
look at the previous Fed tapers, the
Yeah,
market
it's too
always
early to really say that we
yeah.
are past the bear market. We have
So
to
so
wait.
remember, rates are rising. We don't know when it's going to stop, right? It could continue to
Mhm.
rise, right? Especially the 2 year, the 30
We're gonna get
year.
10. We're gonna get at least 10 hikes,
Yeah.
right?
Yeah.
10,
So
20,
so
I
10,
they're
don't know.
20
saying
rate
seven,
hikes.
seven, seven to
Keep
10
going.
hikes.
Seven.
So right
Seven.
now we're priced for four.
Then,
Okay.
okay.
So
It goes up by one every month, I think, like for the past.
yeah, and then let me show some charts here real quick to kind of like illuminate what I'm trying to emphasize here. So
So
let's look at Bitcoin. This is the
Jeff,
weekly, right?
are we bullish on diamond rings and baby clothing? Is that
Yeah, I know, right? Yeah, yeah.
I just have to stay
So
cash and
so so I want to look at
long
this chart. So this red line is a 20-day
average.
moving average, right? If you know it's the last time Bitcoin crashed, it bounced off the EMA 5 weekly, the weekly 5 EMA, which is this
Lots of
solid
resistance at
thick
48,000.
line, right? And you notice, look what happened this time. The 20-day went below it. It didn't even bounce off it, right? It
Yeah.
went below it. That's a problem. This is a weekly chart. This shows you institutional footprint. Weekly is like the institute. They can't hide their flow if you look at the weekly chart, right? And then if you
Mhm.
go to SPY, and even honestly any chart, the weekly, right? The
470,
yeah, the
460 is
20 the 20 days crossing below all the other moving averages. That's always a sign. We want to wait till it starts curving back up, which it could do soon. But you notice that we closed below the 20-day here. So this weekly close wasn't that strong. And I'm not surprised futures are red, honestly. And you look at QQ is actually worse. Look how steep that drop was, and it closed right on the 5 EMA on the weekly, right? It closed right here. So we have to kind of be careful to see what's going to happen here if the 20-day is going to cross the 200-day moving average here. And you look at the daily chart as well, right? It's kind of you've never seen that. We never seen that happen since March. You look at this line here. We never crossed below this 200-day moving average.
Never crossed below.
Yeah, so this is a long-term
that
thing.
Is a bearish
so that is bearish long-term. So I can emphasize, just play the swings. We're gonna have these crazy ups and downs, and just play it for what it is. A lot of gamma, and what I'm saying is for people that are holding certain companies, if you're not fully confident in the company, and you don't want to stomach like a 20% sell-off for Facebook or something like that, or other companies that you're holding. Just be cautious and think about your risk.
It's not for any aggressive risk taking.
Yeah, and IWM's the worst.
It has to be an amount that you're really willing to lose.
Look at IWM. This is just
that's a breakdown.
That's an H pattern. Remember the H pattern I keep talking about? H, and then you look at the weekly. It's even more clear on the weekly time frame. These are institutional footprints. But look, the 20-day just decisively crossed below the 200-day, all the other moving average, and below the 5 EMA, the weekly. That's very bearish, by the way. This is why Bitcoin did the same thing. You notice, like, IWM and Bitcoin are more risk assets. They're more speculative in nature, right?
Yes.
If you look at Bitcoin and IWM, they broke down the most because they're more speculative, right? They broke down below the 5 EMA. I've never seen this happen until recently. So that's why I'm like short-term bullish, but like long-term bearish. And it really depends on the CPI print. If the CPI print is below expectations, then we might be smooth sailing, because they're going to say, oh, the Fed doesn't need to hike that much. They can just hike like 2 or 3 times, and then we're just going to melt up, right? And because the economy is actually decelerating, there's some indicators that a lot of the data from the economy, we're starting to slow down. Growth is not as high as it was expected in 2021. So GDP growth is actually down versus last year. So those are things to consider. So what I'm waiting to happen is, like, what is the move? If it's gonna correct another 10%, then I'm gonna go long, because the Fed is going to be more dovish. They're gonna actually pivot because the economy is slowing down, and they're gonna pivot, and then we should get the melt up that I talked about that could get us to like new all-time highs, because everyone's so. You have to think about it. A lot of people are short the market right now. The put call ratio is really elevated, like Nikki was saying. That's why we get these bounces. But a lot of people are short. So when the Fed pivots and doesn't decide to hike 10 times or whatever, all those short positions will get blown up. And we're just gonna,
when's the Fed discussing this? Is it this Wednesday?
March FOMC. No, this Wednesday is the bond auction, and then we have some Fed speakers just talking. I don't know what they're gonna say, but March FOMC is when they will give clarity on exactly what they're going to do. The last meeting that Jerome Powell had was really bad. He was he didn't really give any clarity. He said it's data. When he says data dependent, it's adding uncertainty. That means they don't know what direction they want to go. He used the word data dependent. That's a very key word that a lot of investors that follow the Fed look for, and he did say that. So the Fed meeting was actually not a good meeting, honestly, because they actually acknowledged that inflation is a problem. He actually said it, that this is not transitory. Inflation is a problem, and we need to fight it. So that's why long term, just be careful and look at the enterprise value and the delta between the enterprise value and the stock that you're looking at, to make sure that you're not, it could go lower. So be prepared to like set limit orders that are 20%. Because Zoom hits 120, I'm buying it, right? TWLO hits 70, I'm buying it. And I said ARK would go to less than 60, but it did go to 64. It did go lower. So it depends on if you look at the charts, you have to just look at like what's going to happen. How is price going to act when it hits that weekly EMA? So this week we will know for sure the direction. Okay. So this week we're going to close either below this 5 EMA or above it. And that's going to matter. If we close above it for this week, then I'm bullish. Okay. Cause we're going to bounce. We're clearly going to bounce because we captured it. We're not retesting below it, and we're gonna bounce. So QQQ, this 5 EMA on a weekly is very, very important line. If you look at the history, right? The last time we crossed below it was March, and look what happened here, right? So look, we never touched it.
Mhm.
This is crazy. Just look at this chart. We never went below the 200-day or the 5 EMA until recently. So these are something that you want to keep in mind from a macro perspective. But look at the buying volume though. Like dark pool was very bullish, and look at this buying volume. We have a lot of buying volume the last 2 weeks. So could this be reversal? I'm not sure, and we have to
Could
wait
be just
until
mixed. This week would be mixed.
Yeah.
Maybe 1 to 2 weeks, because there's going to be a lot of earnings that could actually disrupt the market movements, get the bears squeezed out. The bulls will be happy, but it's not an over. I would go for the what you said. I'm with you when you said that the market is going to be long term bearish. At least when we talk about long term, as in a year or two. So 2022 is going to be for the wild swings.
Everything I'm looking at technically, I think, yeah, there's room to go down, but you're in a buying opportunity right now.
Mhm.
So there's
I think dollar cost averaging is your friend for sure.
There's no reason to be afraid and try to time the bottom perfectly. You buy what you love right now, and you're probably going to be
and just hold it. Yeah.
Actually, I think what would be interesting is how the markets respond on a bad earnings report. Because I've seen how bad PayPal was. We've seen how Netflix was bad. But I was looking at it, and Bill Ackman stepped in on Netflix. Sure, it was just a 30% swing, but that was the swing that a bull would look at because the earnings and the risk was already priced in. So that's one of the reason why I know that everybody hates PayPal after the earnings call. Everybody hates Facebook after the earnings call. But those two are the ones that I'm taking a look at. Like, how low would it have to be for people to step in? It's not going to be a momentum play. Obviously, this year you've got a swing trade if you wish, and you have to be very nimble. It's a tough year. I mean, I don't think this year is for people who will just buy and sleep. If you're going to buy and sleep, they got a cost average something that they could hold on for a 40-50% decline. And the decline could happen just because of an earnings quarter. I would assume practically 90% of mutual funds would have exposure in Facebook last week. They got killed. Either 5% of their weight was Facebook, well, they got killed there, right? So yeah, I think like what Jeff said, it gives you the balance, right? Like it gives you balance that no matter how bullish you are with a company, you have to understand there are bears waiting to prowl 25% higher. Even Snapchat, I'd say I took a look at Snapchat. Look, it's 50% down from its $80 high. The only reason why it went up 60% was you were like down 80% to begin with. Had you been $40 prior to earnings, it wouldn't have gone 60% ballistic. So it has to do with the setup before the earnings. That's why there was the move. I don't know. So we'll see. Any last words? It's an hour already. Some people might have a lot to do. Go. Any last words you want to share? Any?
Yeah, I think a lot of the uranium stocks are in a good spot for. I'm still uber bullish on uranium. I think if you look at like Quad U, CCJ.
I'm actually looking at Sunrun this week. I want to see how Enphase and Sunrun are reporting their numbers because on one end, I know that they got killed. I just want to see how the market's going to react. Because if clean energy is a secular theme, is it going to be killed 90% down? What type of earnings does the market want to actually be bullish on them despite these 10 rate hikes or macro problems? So, I mean, I just wanted to know. I'm actually listening to what the market wants to say. That's why so I think like this week, every market participant is still on the edge. They're not really betting, like they're not committed. If they're long, their tight stops 5% lower if ever. So it's not a committed. It's not a committed pot. Like most people are just watching the market, see if it's good, and then commit after the earnings, or commit on the other industry players after a report was out.
Yep.
Because obviously after end phase reports, that's when you can be bullish on Solar Edge or bearish on Solar Edge, because you're just gonna look at similar players. Or Sunrun, I think Sunrun's reporting their numbers this week. So after this week, it's gonna reflect on the movements on for solar or Sun Power. So I don't know. It's more of a watch. For me, it's more of a wait and see. It's a wait and see approach, but you're also cautious and yet bullish. I'm more short term bullish, really short term bullish. How about you, Martha? Are you bullish on anything, or you hold puts? Do you have cash? What do you do?
Well, what I'm doing, I'm actually trading only.
Mhm.
The only long that I have and synthetic is Palantir, because I'm super bullish in Palantir and I don't mind holding Palantir. But I fully agree with you guys. It's bearish on the long term, but I think it will be bullish for some weeks
A
or
few names,
months.
right? Distinct. Yeah. So I guess to part for the week, a lot of interesting companies are reporting, but you don't have bulls that will succeed because of the bearish climate. So everyone's just got to be on
Mhm.
top of their positions as well.
Yeah, I want to
Okay.
share the last.
Oh yeah,
Last.
sure. Go, Jeff.
Here's my prediction. I'll share this chart. So February, as you guys, I left a note in my calendar, by the way, to remind myself. The Nasdaq loses about 5% in February. It's the worst. It's the worst week. The only worst week was October 22nd to the 26th, or October OPEX. So February OPEX is actually a very, very bad month for Nasdaq. I don't know why.
Mhm.
It's just historically is the case. You notice the COVID crash, February
Yeah,
20th,
it was
19th.
February.
That's OPEX. After OPEX, boom, we sell off. February 19th again. What happened? After OPEX, boom, we sell off.
Okay.
We already had a sell off here. So I'm just like, what the hell is gonna happen? So
Jeff,
are we gonna
have
are
a
we gonna
theory why we sell off on February? It's always after Chinese New Year. I think Chinese New Year, all the Asians are just on a holiday, so there's always like a sell off.
Yeah,
I don't
so
know.
here's how things gonna happen. So I'm short term bullish before Wednesday, right? After Wednesday, I'm not gonna be in the market. Honestly, I'm just gonna swing, but I'm gonna
So
swing
like 3 days
I'm
you're
buying
gonna
Monday's dip. So if
invest.
futures are red, I'm buying AMD. I'm swinging
Yeah,
like
Monday is
all
a
the
buy,
good
but
stocks.
Wednesday is a sell.
And then I'm getting out Tuesday and Wednesday. I'm gonna scale out Tuesday, and I did the same thing last week. Honestly, I've
Yeah,
told everyone in my trick trade exactly what I did, and
I
what
did.
happened. We sold off Wednesday. It was
We
crazy.
sold
So
off Wednesday or
so
Thursday. Yeah.
so look at the dates here, right? So we're gonna probably rally here, and then we're gonna hit the OPEX and then sell off here. I think we're gonna revisit the slow at least. I
Okay.
think just looking into this chart. So that's my next 3 weeks prognosis, and just based on
Buy
history.
Monday, sell Wednesday. That's the trade. It's the
Yeah, so
trade.
buy red futures, sell green futures. Okay, so
Yeah.
whenever the
Yeah.
futures are
Buy red,
red, you
sell
notice when you
green.
buy the red futures on
Mhm.
Monday, especially every Monday has been bloody red, and you buy
Mhm.
Monday's dip, you're in good shape. So I'm
Yeah.
buying Monday's dip. Unless the pattern changes, I'm gonna change my behavior. But it's been working for me so far, so I'm gonna continue it. But I'm
Sell
just
on
warning
Wednesday
everyone to
Uh,
please
because
don't forget OPEX. I warn every single time, every month, every time we hit OPEX. I tell everyone in quick trade we're hitting OPEX. We're gonna have volatility. We usually get weak towards it, and
Mhm.
literally without fail, every single mid month we have weakness heading
Yeah.
into options expiration.
it's
It
in
would
the
it
So
would
eight.
honestly be perfect just to get us that another 10%, and we get it over with and going into March.
exactly, yeah. So
OPEX is 18. Am I correct, Jeff? It's in the 18.
OPEX is mid February, so it should be the 14th or 21st. Let me check real quick. I can double check this.
so just
I think
relax
it
on
was
Monday. It's
18.
Valentine's Day. Zero positions on Valentine's. Long love. Okay, so
February 18th.
Yep.
Wait, February 18th
18.
doesn't make any sense. Hold on. That doesn't make any sense. Let me
Have
see
have
when.
you, I recently heard about this thing. I never heard of it before. It's called Galentine. It's like the day before
Valentine.
Valentine's Day. Girls get together and like celebrate Valentine's Day together.
Ah, so
Yeah,
the single girls
it's
can
like a
just
thing.
have a gal pal.
Oh, that's interesting.
Anyway,
It's
this is a
February.
thing.
It's
Yeah.
February 18th, but that's a
Jeff,
Tuesday.
The
Valentine.
Wait.
OPEX,
I'm looking at the wrong month. I'm
OPEX.
sorry. Oh, I'm looking at the wrong. It's 18th. Sorry, it is 18. I was looking at October. I was like, I'm on the wrong date. So yeah, it is. It's the 18th.
18. Yep.
Okay, so interesting, important dates. So Wednesday, you've got earnings reports for Disney and Uber. And then also you've got the CPI auction, bond
Mhm.
auctions as well. Then Feb 18, you've got the another day that everyone has to take a look at.
Yep. Yep. Yep.
So there, lots of
Awesome.
mixed bags. I guess we'll expect volatility. And for volatility, the answer there is you go long volatility. So long strangle technique would be good. And I mean, you have to be insuring yourself. So one way to insure is either to have a lot of cash and just be nimble. This is a kind of market wherein we could just reverse our ideas tomorrow simply because this is what just happened. We could reverse the bull or reverse the bear. Okay, all right. See you again next 2 weeks. Thanks again.
Thanks,
I learned a
guys.
lot.
Take care.
Bye.
Take care. Bye bye.
Bye.
Bye.